High-yield bonds generally move in concert with stocks. They're seen as kind of a de facto stock, at least for the bond market, but a part of the rise over that past month has left junk bonds in the dust. Is a junk bond comeback ahead? Welcome to Trading Nation. Craig Johnson of Piper Jaffray, Zach Karabell of Envestnet are your team today. Zach, listen, people like junk bonds when they pay a little more, and there's a little more. They're being compensated for the risk. The problem is now as rates go up, I guess they become a little bit less attractive and also maybe a little riskier, correct? Because they may also have to pay higher rates.
Right, and to understand the context here, 2015 into early 2016 was a really bad time for high yield bonds. And if you look at HYG, it's off more than 15% as the world thought you were going to have massive defaults based on the collapse of the energy and commodity complex. That didn't happen nearly to the degree as feared, and so a lot of high yield bonds have actually done very, very well as a generalized asset class in 2016. So even though they haven't done so well in the past 4 weeks as stocks have, and you're right, some of that is in anticipation of higher rates and how that could impact, you do have to look at that as part of a bigger picture, which is it's been a very strong year after a very weak year, and we're kind of back to where we were a few years ago.
So, Craig, if we look at the HYG, that's the ETF. A lot of the viewers of Trading Nation may be familiar with that. You can buy it, and it's just a collection of a bunch of junk bonds. Does it factor in this 20 or 30-day change? I mean, do longer-term charts matter given the election and big surge in interest rates over the last 20 days? Or does it kind of blow the old charts out of the water?
Well, Brian, we always think that charts matter because it's a great discounting mechanism into the psychology of what's happening with investors in these markets. And the chart we brought in this afternoon is we brought a chart looking at the HYG looking back 10 years, and at the bottom of it we put in the correlation between the S&P and the HYG. And what we found over time is that, yeah, you generally have a positive correlation, but there are periods of time that we kind of denoted with those vertical lines where you get a negative correlation. And when that happens, it actually ends up being a very interesting entry point for the HYG. I'd also make the observation that over the last 10 days, this is one of the steepest advances we've seen in rates on the 10-year, looking all the way back to about 2010, when one analyst was talking about the spate of defaults on a television program, and that led to a very steep rise in 10-year bond yields. Haven't seen any rise like that since then, and right now, looks like now is the time to be buying the HYG for a bit of a catch-up trade.
Now's the time to be buying the HYG. Zach, do you agree?
You asked a technical analyst if charts matter. I mean, that is like the ultimate, Anyway.
Hold on, because you're both my friends as well. Let me be clear what I meant by that. And I think Craig knows. What I meant was, Zach, was that things changed so much the last 20 days, and very few people apparently predicted a Trump victory, that it's a paradigm. It's a new world, right? So it's like I wonder how much the old charts mattered given this massive paradigm shift.
And I would say, back to the non-chart as part of my analysis, that a lot of these correlations may begin to break down because of the ways in which and the reasons why equities are moving, whether or not we're going to have a rotation from bonds into equities. That said, I think HYG at these levels, I think high yield at these levels offers really good yield relative to risk. But I would not expect the correlation to be nearly as strong for a whole series of reasons that we probably don't have time to get into.
Yeah, well, we got it's the internet. We'll do it again. We'll have more time the next time. There's always time, right? It's like Stephen Wright, the comedian, said, everything is within walking distance if you have the time. Craig Johnson and Zach Karabell, thank you both very much. Charts Matter will be our next segment. Thanks for watching. I'm Brian Sullivan. See you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.